Good morning, welcome back to WealthPadX. Bitcoin has dropped to $10,500, down around 2% in the last 24 hours. It seems like we're still in the choppy consolidation phase, and many traders are waiting to see if the key psychological level holds. Ethereum is also down, sitting at $3,100 at the moment, following a similar trend to Bitcoin. The market is still searching for directions. With February just around the corner, many investors are wondering if we'll see another rally or a deeper correction this coming. Speaking of correction, let's talk about market crashes today. Market crashes are terrifying, but they also present once-in-a-lifetime opportunity. So why do people panic sell when market dips? Why do we see huge waves of selling during every downturn? And more importantly, how can smart investor turn these moments into generational wealth? Let's start with why investor panic sell. It all comes down to the fear and herd mentality. When prices drop suddenly, people don't think logically. They react emotionally. They see others selling, they panic, they want to follow the crowd. That's exactly what happened during the 2008 financial crisis, the COVID crash of 2020, and even the FTX collapse in 2022. In every case, the investor dumped asset at rock bottom prices, only for market to recover later. And I've made this mistake myself. In 2022, I sold most of my S&P 500 ETF positions at absolute bottom, thinking the market is going to keep falling and I can buy them back much cheaper later. But of course, it bounced back not long after, and I had to sit there watching the recovery happens without me. Looking back, I realized the mistake wasn't just selling. It was buying too big of a position in one go. Because I invested in a lump sum back then, I was emotionally attached to the price, and that affected my judgment. Now I approach investing with dollar cost averaging DCA. That applies to both crypto and stock. It is so much easier mentally. Instead of stressing over price swing, I just keep accumulating over time, knowing that short-term volatility doesn't matter in the long run. Just to quote Peter Lynch here, time is on your side when you buy a quality asset. So, how can you survive a market crash? The key is having a long-term perspective. Essentially, every single financial crash in history has eventually recovered. That's why smart money don't panic sell. They buy when others are fearful. DCA into Bitcoin, Ethereum, or other solid stocks during downturns is how wealth is built. The best investors don't check prices 10 times a day. They focus on fundamentals, long-term conviction, and strategy. The market will always go through cycles, but those who stay patient and accumulate when prices are low will come out ahead. So next time you see a red chart and headline screaming sell everything, ask yourself, are you reacting emotionally? Or are you thinking like a true investor? Let's take a look at today's top news. A new milestone's been reached. There are now officially more Bitcoin wallets holding over $100 worth of Bitcoins than ever before. This suggests that Bitcoin adoption is continuing to grow, with more retail investors entering the space, while whale movements still dictate large price swing. Small investors stacking satoshis shows that Bitcoin's long-term fundamental remains pretty strong. Binance data shows that despite the recent price dip, wallets accumulation Bitcoins are at record levels. The second news, Michael Saylor is at it again. He posted a Bitcoin tracker for the 12th consecutive week, hinting that another MicroStrategy Bitcoin purchase is on the way. MicroStrategy is now sitting at over $19 billion in unrealized gain from its Bitcoin holding, proving once again that his conviction in Bitcoin has paid off massively. Although MicroStrategy's stock has seen some choppy price action lately, it is still up over 600% year to date, closely following Bitcoin's movement. If another buy happens, we could see Bitcoin regain strength and push back toward 110k level. The last news. In a shocking story, Ledger's co-founder David Bullard and his wife were rescued after being kidnapped for several days. Reports suggest that the criminals were after crypto-related ransom payment, but thankfully authorities managed to intervene before the situation escalated further. This incident highlighted the ongoing risk for high-profile figures in crypto space and the increasing threats around digital asset security. That's a wrap for today's episode. Stay invested and I'll see you tomorrow.